Baltic Dry Index, which measures the cost of shipping raw materials, has slumped by around 50% since the end of May. So we've seen a significant drop-off, but also keeping in mind that it's not nearly as much as what we saw during the recession, where we saw the Baltic Dry Index lose around 95%. Of course, that creates a lot of concerns about what kind of demand we've been seeing coming through from China and where demand is going from these levels. It also brings into question the amount of fleets that we have on a global level and how this is impacting the BDI. Well, joining me now to discuss this further is Arnold Werbeloff. He's the industrial transport analyst at Kagiso Securities. Arnold, thank you very much for your time today. Well, you know, looking at the Baltic Dry Index, I mentioned that it's come down by 50%. Do you think it's quite surprising that we've seen such a drop-off, or do you think that we are more suited to fundamental levels at around 2,100?
I think that it's a bit overdone maybe, but there are fears about the Brazilian route that Vale might, with their own fleet, take over the route, and also Chinese demand coming off slightly, and also Indian demand in the monsoon. These are all having an effect, and obviously the number of ships which are on order, which is unprecedented, especially in the larger size, the small Cape vessels, which are the biggest amongst the bigger carriers.
So we have a lot of ships that are on order at this point in time, so that could even exacerbate the moves on the Baltic Dry Index going forward.
Correct. There was a time when people thought that these would be delayed or cancelled, but they seem to be coming through on schedule now. So on the dry bulk side, on the coal, iron ore area, for example, those carriers are definitely being delivered. So yeah, I think we are going to see more ships for the next two to 3 years.
So obviously this is anticipation of increased demand, and I'm sure everyone's looking to Asia, because when it comes to the Baltic Dry Index, you know, the main routes are from Asia and to South America and to Africa as well.
Correct. Look, I think we're going to see certain companies having to change their strategies, but I've been looking at Grindrod, and they've got pretty robust strategies to deal with this.
Just looking at the Greek shipping industry, because they account for around 13% of the total of the vessels, and we've also seen quite a massive growth there, and the shipping industry in Greece doing relatively well, and this also affecting the Baltic Dry Index.
Yeah, the Greek shipping industry recently had a conference, biannual conference, and I think the mood was very positive last month because the dry bulk markets had rebounded. Since then, I think they maybe put their caviar away, and now they're looking carefully. But the Greeks have ordered a number of ships since the crisis, and they feel they have orders for them. And also their finances are much better than during the crisis. So they have the money to pay for these ships.
Okay, just looking at a company such as Grindrod, because some say that the Baltic Dry Index directly affects Grindrod and others say it doesn't. Where do you stand on this?
Well, it does affect them, but it's becoming less of a problem over time because they're getting more and more into ports and terminals and into other areas apart from open ocean shipping directly. They're into trading, they're into finances, they're into various things. They've got big investments in Maputo, for example, and there's big demand for port facilities in Southern Africa. There's a shortage of ports. In port facilities.
And of course the Baltic Dry Index, as we said, has fallen around 49% since the end of May, and Grindrod share price relatively flat over the last month. So it's quite an interesting move.
It's relatively insensitive at the moment, but obviously if these rates continue to be low, that will affect eventually the rates at which people can charter out ships, which will affect them in the future.
Okay, looking at, as we said, an increase in vessels, an increase in ships is what we're seeing at this point in time. But what about the demand scenario? Because that is really going to be quite telling of what we're going to be seeing going forward. And at the end of the day, we know that the inventory rebuilding cycle has already come to an end, and now we're waiting for the real demand to come forward. Do you think it's going to meet expectations?
I think one has to look past cyclical events. One has to look at the longer term picture. Asia is going to take an increasing percentage of the world economy and world trade, and particularly China and India. So these are heavy users of South African coal, iron ore, Brazilian coal, Brazilian materials generally. So yeah, we feel that longer term they're very positive trends, even though there might be a temporary lull in Chinese demand. The crisis was partly caused in the shipping industry because the Chinese stopped buying ship capacity for a time because rates were too high. It suits them in a way that rates are lower. So yeah, I think there will be a recovery.
Well, just looking at the commodity price cycle that we're in right now, a lot of volatility coming to the fore because there is still talk of a possibility of a double dip scenario. How do you view this, and how do you think it's going to affect commodity prices, and obviously in turn it will affect the shipping industry as well?
Well, our view is not that negative. Our house view is that there will be growth in the world economy and also in South African economy. Even Dr. Doom, Niril Rabini, actually said the other day that he doesn't see a double dip coming. And yeah, if you look at the forecasts of the IMF, the World Bank, the commodity forecasts of these organizations, they're positive. Maybe not huge growth for the next few years, but certainly no big dip.
Your view on Transnet and the most recent developments there, I mean, regarding the wage disputes that we had to face as a country, and obviously the fact that we're sitting with quite a massive lag that we have to catch up in terms of the shipping industry when it comes to Transnet. I mean, apparently 2 months behind is what we're seeing for many of these companies. I
think Transnet is taking a pragmatic view. They're entering into discussions with a number of companies, including Grindrod and a variety of others, on how to increase capacity. Possibly even these companies could buy rolling stock and lease it to Transnet. Also terminal facilities, they will help. There's possibility of partnerships if they want.
All right, any last comments on the Baltic Dry Index before we say goodbye, Arnold?
It's very volatile. It's been much worse than this, and it can rebound very quickly.
Where do you expect the average to go from here onwards?
Well, historically it's been more like 3,000 than 2,000 or 1,000. So I think it could go back there, but not tomorrow.
All right, and as we